calling these things.
Yeah,
Welcome to the show. How is everyone?
Great.
We're awesome. Busy, crazy.
Yeah,
Friday,
it's
crazy day.
Listen, 1 week until ACRE today. Like in a week from now, we're going to be at ACRE, Vancouver Real Estate Investor Summit, only once a year. That's incredible. Now, I want to start off by saying this, gentlemen, which is these are what I'm calling a lot of, we've said many times, these are confusing times for investors, and they are. But I'm actually saying, I've taken that to the next level. I'm saying these are dangerous times for real estate investors because it's in these moments that real estate investors make mistakes because it's confusing. There's reverberations, there's stuff happening in the financing world. And this is where investors make mistakes. And in doing mistakes, they make millions of dollars of errors. And Patrick Francie, you know all about that, don't you?
Wow.
Yeah. Okay, so I don't know what that setup is for. I do know about that. I've made some errors. I don't know about millions.
Yeah, I was thinking millions. Hey, all right.
I didn't say you made the mistake, but you've
okay.
seen this happen many, many times.
Yeah, we've seen this happen many times over the years. You know, in markets like this, it really is. It's a little bit uncertain. And especially in BC/Vancouver, we're talking recovery. Well, where in the recovery? When is the recovery? Now, what are we doing? Are we buying now? Or are we holding off? And of course, at the event, we're going to be talking a lot about that, building your team and structuring the next step and having a plan put together really well, and enhance the conversation that we're having with Kyle Green today, because ultimately we need to put a plan together, and financing is critical to our success as a real estate investors. And that is not where you want to make mistakes, is on the financing side of the equation. So,
and I'm glad you brought that up, because Kyle, we were just talking offline here, and that's exactly what people have done in terms of not setting themselves up properly from the get-go. Now, at ACRE, we give them the step-by-step on what they should be doing. But tell us about these mistakes people are making, these dangerous times, and how we're bringing this together at ACRE.
Yeah, I just see clients that have built a real estate portfolio up to 2, 4, 10 rental properties without beginning with the end in mind. And so the biggest challenge that we face is trying to fix somebody's real estate portfolio after they've got a bunch of stuff going on. So for instance, if a client comes to us and says, Kyle, I want to buy 10 properties, that's a very different game plan than somebody that says, I want to buy 1 property and see how it goes. I think that the problem is some of these use generalists who say, yep, go ahead, bring me a deal, I'll get it done. And then they get the one deal, but they're focusing on the one deal at a time. They're not focusing on the overall global issue here, right? And what is the end goal here? What are you trying to achieve in 5 or 10 years? So it's always just a matter of making sure that what they're doing today fits the long-term goals, so that we're not trying to go in and restructure a whole bunch of debt, paying big penalties to do that, perhaps even changing title to a company, which is incurring tax costs, property transfer tax, a lot of different expenses.
And a lot of accounting costs and legal costs to make that maneuver. So if you're going to take 10 properties out of your name and actually put them into your corporation, you're actually selling the property back to the corporation, tax consequences. And of course, to avoid all of that, you need accounting and you need legal, which then brings the costs up in terms of making a transaction like that.
The minute you get those two people involved, the cost just skyrocketed.
Yeah.
That is true.
But
so go ahead. No, go ahead, JG.
No, I was just going to say, because this is interesting. At RAIN, we talk about the 3-8-17, financial certainty at 3 properties, financial security at 8 properties, and financial freedom at 17 properties. And as we work our way towards 17, this is those dangerous times, because you're trying more and more. And I know, because I've been in this situation where you're trying more and more to jam that last property through. It's like, I only got 1 or 2 left in me. I know that. And this is where, coming to ACRE, you can understand the bigger picture, because if you're making those kinds of decisions, like, I just got to get that next, maybe the 1 more, maybe 2 more, this is where you make mistakes. This is where it costs you hundreds of thousands of dollars in the long run.
Yep, absolutely. I've been finding that. Yeah, go ahead.
I want to ask you one question, because this is so important. I don't want to step over, because ACRE really is about, in some cases it's, getting started or going to the next level, depending on where you're at. But in a getting started place, which is ACRE is really foundational for that. Let me ask you this question. If somebody comes to you and says, well, I don't quite know what I want, I don't have my first property yet, real estate's the thing, do you really do you want to push them to say, you need more of a plan than I want to buy a rental property? Do you actually have that conversation with them as the expert that you are in this space called financing and mortgage financing?
Oh, absolutely. So sometimes people come to us and they don't have a plan, and that's okay. But every single conversation we have with an investor when we're working through what they qualify for, it's not just a matter of, hey, you qualify for this much, go out and buy property. It's always, what are your end goals? Because we want to make sure that whatever we're doing today fits those end goals. And a lot of time in the initial conversation we have, I ask them, do you have an idea of what you want? And if they don't have an idea, I say, great. While you're working on getting us your documents, I'd like you to sit down yourself or with your significant other and start to brainstorm, where do you guys want to be in 5 or 10 years? What's the end goal here? Because then when I have your information, I know where you're at today. And we also know where you guys want to be in 5 or 10 years, and we can build that game plan, right? Without that goal, what we're doing today, it's very transactional based.
Yeah. And interestingly, that's exactly what ACRE is all about, is putting together that plan from start to finish in terms of where you are today, where you want to be, why do you even want real estate? You know, I ask this question all the time, Kyle. People say, oh, I want to get into real estate. I want to own property. And I say, what do you want property? What do you want real estate to do for you? And they don't know what to answer. Like, what do you want real estate to do for you is a critical question you need to be able to answer if you're going to be a phenomenal real estate investor.
Yeah, I've had a number of clients that had that exact thought. Hey, I've heard about investing in real estate through a friend or whoever. And I said, you know what, you should really go to the ACRE event, check it out. And then it gives you an idea of all of the different options. And you guys are really good at both setting that game plan, like the 3-8-17. It gives people a little bit more focus. And then once they have that, they say, okay, I'd like to do this. And then I'm the guy who says, you can't do most of the things you want to do, unfortunately, but you can do these things, right? And then give you focus on, okay, these are the things you're interested in. Hopefully we can do those. If not, though, here is an idea of what a game plan that you can actually execute on is.
Now, Kyle, go ahead. Patrick, you got a question? I got a great one for Kyle.
I got a great one too. You go first. I'll be a gentleman.
I just want to say this, Kyle, you've been around a long time, and ACRE is, you know, there's very, very few events in this country, in Canada. There's very few events around the world, but there's very few events in Canada where you have this caliber real estate investor in one room that are all surrounded in the same culture, the same community, the same environment, working towards the same thing. Some people are going after their property number 100. Other people are going after property number 1. But this is the environment to be in. How important have you seen that be for real estate investors and their goals? Because you're a real estate investor, you've been at this for a long time. How important is the environment, the culture, and that being in the same place with everyone?
I think the sense of community is huge. I can't tell you how many people I talk to that say, I talk to my parents, they think I'm crazy. I talk to my friends, they think I'm crazy. I talk to my coworkers, they think I'm crazy. And then they come to an ACRE event and like, oh my God, everybody here is like family. They understand, they get it, right? And it allows for people to converse with others and learn not just the in theory, but also the in practice, right? And say, oh, okay, so you did this, why did you do that? And you can start to learn from other people. A ton of people go and find joint venture partners at things like this. It's wonderful. So I think that finding that sense of community is really what people didn't expect going into it. And then they realize, oh my God, this is a really cool experience. I got 5 new people to talk to and keep in touch with and hold me accountable.
Love it. PF?
So here's my question, because you know, there's always the conversation about what are interest rates going to do in the future. Now, as I look out into the horizon, as I have different conversations with some, you know, pretty significant individuals that are in the industry, and they're playing and they're going, Patrick, 2020 is like going to be an awesome year to get in the game called investing in real estate, and interest rates, no way they're going up in 2020. Now, what's your opinion of that? I'm not even going to share my view of it. That's other people's view. But what's your view of it as being in the industry? How do you see mortgage rates? Do you see a big spike up? Do you see it flat? Do you see it down? What's your thoughts on it? Just to share.
And I know we're going to talk a lot about that. I mean, you're putting the poor guy right here on the spot. But we're going to talk a lot about that at Keaton's going to be there, and we're going to talk a lot about that at ACRE.
Oh, yeah. No. We're going to be talking about it, but I just want to hear from Val. You don't have to get into it, but what's your view? Give me a little bit of an insight.
I'll get into it. It's okay. If I'm wrong, you guys will just hold me to it, right? So that's
That's right. We'll have to cover the spread.
I've been reasonably accurate about predicting rates for a while, but I usually rely on better, smarter people's data to make those predictions. So it seems like right now the trend is downwards, and we're expecting the Bank of Canada to be dropping anywhere from 1/4 of a point to 3/4 of a point by the end of 2020. People that bet on what the Bank of Canada is going to be doing have priced in approximately a 60% chance of the Bank of Canada dropping on the October 30th meeting, and a 90% chance by next March that they have dropped at least 1/4%. So it definitely seems like interest rates are likely to be dropping. From talking to a few other people, I was actually at an event yesterday, and the economist from Central One, which is the head of all of the Credit Union Central, he spoke about interest rates too, and he's of the opinion that that we'll also see interest rates dropping, and that also on the fixed rate side, he's surprised that that mortgage rates are where they're at, and he's expecting fixed rates to also start to get squeezed and drop a little bit too. So I think we are going to see interest rates drop. 1/4% is a pretty safe bet. I think that somewhere in the half percent range is a reasonable expectation, and the extreme downside, if we do see a recessionary period, would be about 3/4 of a point.
That's consistent with what the feedback that I'm getting as well. But here's why this is really important, JG, and Kyle, you know this as well, is that if interest rates are coming down on mortgages, it means that if you have money in the bank, what are you getting for an interest rate on it? It's already a low interest rate in the bank right now. So if you've got capital,
I'm surprised the bank doesn't want me to pay them to keep money in it right now.
Don't even get going there, because that is actually in fact happening in places in the world. Now, so the point is this, is that for those of you who are considering, and why would I want to invest, or I want to invest in real estate, what's the upside? Here's a fundamental truth that is now occurring in this world, which is putting money in the bank, having it tied up is actually costing you money just through sheer inflation. You're losing the value of your dollar. Incredibly important to understand. The stock market, you want to play the game, you play the game, but that's a roll of the dice. You know, ultimately you are at the effect of the mood of a market. And if you're okay with that, I don't know anybody who has a bunch of money, like who has all their money tied up in that world. Now, I own stock, so I'm not suggesting you don't. Now, the key here is that the smart play and the smart money is to park it in a hard asset called real estate, where you can borrow that capital, you can leverage that capital at a very, very low rate and get an exceptionally good return on your investment when you know how to invest in real estate. That's what ACRE is about. And when you surround yourself with a great team, such as Kyle Green and his mortgage team, then you're setting yourself up to win.
Dropping interest rates too will have a positive impact on valuations as well, right? If it makes it more affordable, then people can afford a higher price. So actually the presentation I saw yesterday, the expectation was that prices will go up about 4% next year and 8% the following year, which I thought was aggressive, but it's interesting for an economist to actually get up on stage and say 8% appreciation in 2021.
That's so rare. In what area? What geographic? In Vancouver, Lower Mainland?
Yeah,
where?
Greater Vancouver.
Yeah, Greater Vancouver.
Yeah.
Wow, that is rare for an economist to do that.
Yeah. And Patrick, we are going to have Mark Desormeaux from Scotiabank as an economist as well. Going to be speaking on Friday night.
He's doing a keynote Friday night. He's epic. He's epic. So
and I gotta let the cat out of the bag. He's actually a good speaker for an economist. Like most of these economists are just snooze fest, but he's really good.
He's really good. We had him in Edmonton, and he's outstanding.
Yes.
So that was awesome. Very good.
Well, I look forward to seeing your team, at the event, Kyle and Patrick. Look forward to sharing the stage and co-hosting with you. That's going to be fun. We're gonna have fun at your expense, laughing with you and at you. Thanks, guys, for making the time. Really appreciate it. It's been a great night.
Yeah, thanks.
Bye-bye.
Bye.